we may have another stock market crash in the next couple weeks. So Sunday night and early Monday morning, we're already having another spike in the VIX. As I'm recording this video, the VIX is already up another 10%. So just in the last couple trading days from the short day on Friday and then also on early Monday, VIX is already up over 40%. This is a warning signal combined with the dollar index rally, and we started to see other warnings of this last week. As you can see with the tweet on the right hand side of your screen, a lot of the problems for decades have started in emerging markets besides the 2008 housing crisis because of how much dollar denominated debt from both governments and corporations is in the global financial system. And every time, and this goes in cycles, and this is why I came up with the dollar tug of war thesis. So every time the dollar index gets weak, what you have is you have foreign governments and foreign corporations, mostly in the emerging markets, start to borrow way too much dollar denominated debt when the dollar gets cheap. And this amount of dollar denominated debt, and I highly recommend going into the archives of my YouTube channel and watching more of my dollar tug of war videos. But every time the dollar and the dollar index gets weak, you have a lot of foreign governments and foreign corporations try to take advantage of this, and they borrow even more dollars. And this is the case of what happened in early 2020 when the dollar index got weak after it was monkey hammered down from 104, when it almost broke through overhead resistance levels and Brent Johnson's dollar milkshake almost came to reality. The rules were changed. The Federal Reserve and U.S. Treasury announced a bunch of new liquidity programs, bailout programs. They didn't actually, in some cases, print the majority of the money, but they got, with a combination of bailouts, rules changes, press releases with more liquidity programs, they were able to get the dollar index down quickly. And when the dollar index was down, that's when you had all these foreign governments and foreign corporations in emerging markets start to borrow even more dollars. There's a bunch of reasons for this. It's not just one. There's interest rate differentials and other things involved. You also have people, when the dollar is already weak, betting on a continued weak dollar. But this dollar denominated debt, I believe the Bank of International Settlements says that it's over 13 trillion, another $400 billion in dollar denominated debt. A huge increase was added just in 2020. So there was another big spike in dollar denominated debt. This creates demand for dollars. So that dollar denominated debt has to either be paid off in US dollars or at least serviced in US dollars, or there's defaults. So the Federal Reserve may have to step in, and there's already some bailout programs, some covert ones that were set up earlier this year with the permanent repo facility for foreign central banks. But the Federal Reserve may have to step in. And I was hearing about this in early 2020 when foreign bond markets, so foreign corporate bond markets froze. I was hearing about this before it hit your Bloomberg terminals. I was hearing about this from contacts, portfolio managers at investment banks in Asia. I was getting messages that a lot of foreign bond markets in early 2020, so February and March 2020, when the pandemic started, went zero bid. And a lot of the same occurrences happened back then. The dollar was starting to rally. The global economy was freezing up. There were problems in foreign bond markets, as you can see there with the tweet on the right-hand side of your screen, with emerging market sovereign credit default swaps spiking. And now with the VIX is rapidly spiking. The VIX spiking signals that the leverage short volatility trade, a lot of these hedge funds and family offices and portfolio managers at banks also have leveraged bond trades set up. So they were also betting on the dollar not rallying. So they were betting on a scenario where the VIX did not spike and where the dollar index did not have a continued rally. So a lot of these trades, whether it's a leverage short vol trade, the risk parity trade, the basis trade, other leverage trades, Archegos and others have set up. And there's lots and lots of copycats in the hedge fund, family office, and portfolio managers at investment banks. Lots of copycat trades that are put on with leverage, normally with currencies and bonds, and leverage short vol trade. These could all potentially blow up. And the Fed is normally fairly slow, even with all these bailout facilities, to come in and prevent at least a stock market crash in the short term. Although if you go back and look at the history of stock market crashes, really they've only lasted a much shorter amount of time period since 2008. So in 2008 and 2009, we had about 6 to 8 months of depressed asset prices. And in February and March of 2020, we only had about 6 to 8 weeks. So the central banks and government officials and treasury officials, they do more rules changes, bailouts, and other types of manipulations. So this VIX spike and the dollar index rally, if this continues, this is going to signal to me, in my opinion, that the leverage short volatility trade and other leveraged bond trades are potentially blowing up. And if foreign bond markets freeze, similar to February and March of 2020 or in 2008, that will cascade into more mainstream asset prices like regular US stocks. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 190 articles and audio podcasts behind the paywall, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. This content is exclusive for patrons, and just in the last 22 or so weeks, there are 34 new articles and audio podcasts out, including 3 new audio podcasts out in the last 2 or so weeks that are about 15 minutes or more in length on the uranium market, the Q3 earnings for gold miners, and also for royalty and streaming companies, and geopolitical risk that is rising for the mining companies in South America and Mexico. It's getting very difficult out there, but precious metal royalty and streaming companies are the benefactors of all this for a lot of different reasons, and the top 2 ones are increasing dividends. So if I could wrap up this short little video very quickly, if the VIX continues to spike, if the dollar index continues to rally, that to me is signaling that we are going to have a crash, that the leverage short volatility trade and other leveraged trades, so leveraged bond trades, especially portfolio managers at investment banks that are all heavily over leveraged and betting on bailouts, and hedge funds and family offices that also have very similar or copycat trades on these over leveraged bond trades, leverage short volatility trades on. They were betting on emerging market corporate bonds and government bonds. We could have some of those blow up in the near future and start to spread contagion risk, counterparty risk, and that could start to hurt banks. So we'll see what happens. I would watch the VIX. I would watch the dollar index rally and see if that continues. But these are big, big red flags and signals that if this does continue, big spikes in the VIX, if the VIX does not get monkey hammered down soon, that there could be a crash in the next couple weeks in asset prices.